Hey everyone, Logan Hertz here with Hazeltine LLC with Peter Nelson. Peter, how are you?
Living the dream, Logan, living the dream.
So today I thought we would talk about convertible term policies, something that I do a lot of and something that I think is great. I think we need to talk about for a few reasons. First of all, as Peter says, there's a lot of this whole life versus term out there as if they're in competition with each other, when really they're not. Usually the solution is whole life and term, but it needs to be convertible term. So Peter and I try to make distinctions, right? All term policies are not created equal. Okay. You need a term policy. We are talking here about term policies that are convertible and that are convertible with a company that has a competitive whole life product, a mutually held insurance company that has participating policies that are very competitive, which narrows it down to a few. So not even all convertible term policies are created equal, right? We're talking fairly specific here. So a term life insurance policy is just renting life insurance. So if you have $1 million a term for 10 years, that's it. That's all you have, right? Nothing else. Okay. With convertible term, let's say you had a 10-year convertible term policy. You have $1 million death benefit for 10 years, but you have the guaranteed right to convert it in whole or in parts to whole life or permanent life insurance at any point in time over the next 10 years, which is enormously valuable. Number one, it protects your insurability, right? So let's say you're young, you get qualified at the best rate, but then 5 years in, maybe you've had some health issues. Maybe you've gained some weight. Maybe you're not insurable anymore. Or maybe a family member has gained some health issues. That reflects on you, right? Maybe your finances have changed. There can be a lot of reasons why your insurability might be impaired, where you don't get the best rating anymore, or goes away completely, right? So a convertible term policy keeps all your options open, right? That's why it's so important. So with my process, what I typically do is the first thing we do is we take out a convertible term policy to get the client fully insured. Okay. Your human life value is typically a multiple of your income. That's how much life insurance the company will give you. So, as an example, let's say you're 35 years old and you make $100,000 a year. Your human life value is probably 30 times your gross annual income. So, you are eligible for $3 million of life insurance, and you should not accept anything less. The insurance company, of course, is deliberately underestimating your human life value, right? Just the same as your homeowner's insurance and your car insurance will deliberately underestimate the value of the assets they're protecting because they're the ones on the hook to pay out. Okay. So first, we take out a $3 million convertible term policy. Now you're fully insured. Your family has the full death benefit protection that you need. And now we can start gradually converting that to whole life. Maybe the first whole life policy that we're using for infinite banking, we don't utilize the whole death benefit, right? But as we take out those subsequent policies, you're fully insured the whole time, and there's no health risks. No matter what happens to your health, you can convert. It's guaranteed. You don't have to go through underwriting again. So convertible term is a great solution. And even for people who don't believe in infinite banking and don't believe in whole life insurance at all, I still think getting a convertible term policy is a great idea because it gives you so many more options, right? And it's usually only slightly more expensive than a non-convertible term policy.
Absolutely. I mean, you can look, and honestly, it's, you know, um, I'm not going to get into the specifics, but there's one super cheapo term company out there. They might be $10 to $15 a month sometimes, um, cheaper, but then their conversion, you can only convert to one product and it's a junk product. Um, you know, so it's really important and really comes down to value. If you're dealing with a good, agent slash advisor who really can explain this. Um, you would never go into a car dealership. This is the way I like it. I go into a car dealership and say, I want the stripped down, cheapest model you got of car. No, there's certain features that you want on a car, right? Or a truck. That's the same way with this. So it's about value and not about the cheapest thing. Because let's remember, in regards to term life insurance, where I went to school, Penn State University did a study years ago. They showed that less than 2% of all term policies will ever pay out.
Yep. Yep. So I'm happy to say with my new process, how I now, again, there are exceptions to this rule because some people are not eligible for term, but generally speaking, we're always going to do that convertible term first. And then my whole life policies always end up being term conversions. We're not applying directly for a whole life, and there are advantages to that as well. It's generally a simpler underwriting process to put that term in place. Now you have all your options open, right? And also, from an infinite banking standpoint, I don't know if other people are talking about this, but I consider convertible term to be part of your infinite banking system. It's not a supplement to it, it's part of it, right? It's not a whole life policy, but remember, infinite banking doesn't equal whole life, right? Um, but what it does is it gives you the guaranteed right to add more premium in the future, right? With whole life, they age like a fine wine, okay? It would be, which means that the insurance carrier can't say, well, you can pay in $10,000 in year one, and then we'll let you pay in $100,000 in year 10. No, that would never work for the insurance company. So there's always a certain maximum beyond which you cannot pay anymore. So at some point, you outgrow your current whole life policies and you need more, which is a good thing, right? As your assets, as your net worth, as your income grows, you need a larger banking system to accommodate it, which is great, which is great. So what is the purpose of case design? Well, what we're trying to do is we're trying to secure for you the contractual right, but not the obligation, to pay the highest possible premium for the longest possible time frame. Let me say that again. The purpose of case design is to secure for you the contractual right, but not the obligation, to pay the highest possible premium for the longest possible time frame. That really clarifies a lot of things right there. We're not going to obsess over the cash value growth in the policy. That's important. Yes, that's something we need to look at. Obviously, we want the cash value to grow as quickly as possible. All things being equal, we might want the death benefit to be larger. So that's part of it, but it's not necessarily the primary thing we're trying to do, right? So how does convertible term fit into that solution? Well, it secures for you the contractual right in the future to add more premium. You may not be able to today, right? There's certainly a limit to how much premium you'll be able to pay today. So it does happen, but it's fairly rare that someone gets fully insured with the first whole life policy that they take out, right? Usually that first whole life policy, because we're looking more at premium level and cash value growth and not so much at death benefit, we kind of back into the death benefit. It typically doesn't fully insure them, right? So they'll end up with, after we partially convert that, let's say that $3 million term, we may have a $1.5 million whole life policy and a remaining $1.5 million term. And then 5 years down the road, when your income has expanded, then we convert the remaining million and a half, right?
Yeah, absolutely. So you can do some really, I think really when you get into this, like me and you have, there's some really neat strategies. So for example, I've talked about it, you've heard me talk about it before, laddering term. I've done it for myself. I do it for clients all the time. Sometimes I'll write a 10, a 15, a 20, a 30 year. And you say, well, why do I like to do that for clients and myself? Well, it's a little bit more cost effective to do that way. And then we actually use the shorter terms to actually, convert first. And especially if I do it with one of my companies that I love to use, you can actually change the term while the term is in force, which is very unique. I mean, 99%, as you know, Logan, don't allow you to change the term while the term is in motion. But that's just a very unique situation. But there's so many cool things you can do. People don't realize, but it's not like you just go out and buy the cheapest term out there. No, that's not what this is about. It's like anything else. You need to have a game plan. You need to have a professional that you're dealing with that actually knows what the heck he's doing, right?
Right. And the other thing it does is it makes the process easier. So when we're talking with a client, case design can take some time, right? Case design can get complex. So what this allows us to do is that we can go ahead and start underwriting today because you want to get underwriting done as soon as possible and you want to protect your insurability as soon as possible, right? So we don't even have to know what whole life policy design we're going to be doing. We can go ahead and put that term policy in force. Now your insurability is protected. And then when we do the conversion, it's a much easier process because it's just a conversion. It's not going through underwriting. Um, and even if what you can imagine a scenario where you take out a convertible term policy with a good company, but then as you get deeper in case design, you decide, you know what, we actually want to take out the whole life policy with a different company, right? And now you have to go through underwriting with that other company. Well, your convertible term policy still did its job, right? It still protected your insurability during that time frame. So there was no period in time at which you were not fully insured and which your insurability was not protected. So if something happens and you get declined from that other company, you can still take out a whole life policy with a good company, right? And
Yeah,
there are even
let me
some,
just mention something, Logan, real quick. And I don't even know if this is a recent development, but one of our companies actually will now, if you went through full underwriting with one company, not accelerated, they will write an entirely separate policy. You don't have to replace the other term policy. You can keep that. And this company, for example, will come in and they'll write a brand new policy. You'll get the same rating. So I just wanted to mention that real quick. It made me think of it.
yeah, that's where I was going, Peter. A lot of the major carriers have reciprocity,
Yeah.
where assuming you go through full underwriting, not accelerated, and you get approved at a certain rate, they will automatically give you that rating within a certain time frame, not 5 years down the road, but if you're doing it 30 days later or something like that, they'll give you the same rating, so you don't necessarily have to go through full underwriting again.
Believe it or not, there's one company that we use. Actually, it is up to 5 years now.
Okay.
So it's it's pretty cool. Like I said, some of these programs are they're awesome. I love to talk about them. We don't. I'm glad we're doing this video because we I know we talk about it, but we don't really get into some of this nitty gritty. Just while we're talking, I'm like, oh yeah, wait, there's that program available and that one.
Well, people take their insurability for granted, unfortunately. That's really what we're talking about here. There are many things that convertible term does for you, but in my mind, the primary thing it does is it protects your insurability. So you have options no matter what happens to your health. And I know, Peter, you won't believe this. Nobody believes me when I tell them this, but it is possible that something negative might happen to your health. And it doesn't matter how well you take care of yourself. It is possible. It is possible something might happen to the health of a family member. That can affect your rating too. Might not even be you. You might be perfectly healthy, right?
Yeah.
But a family member might have something happen.
Look,
And I know people don't believe me, but that does actually happen. It is possible.
it does. Look, I got $4.5 million on myself right now. Not afraid. I talk about it all the time. I've gotten a super preferred rate on all those policies, and there's a reason why I got them all. I laddered a bunch of term, and I have some cash value life insurance as well because I'm terrified of that exact thing. I could wake up tomorrow and I could be uninsurable, right? Or a lesser rate. That super preferred rating is not easy to get.
Yep, protect it. Protect just like any other asset. You protect every asset that you have. So protect your insurability with convertible term.
And then what I do at the end of the year, by the way, because every year we wait till the end, the business has a good year. I convert another chunk. I love doing that. I do it myself. I literally do this for myself. I do it for my clients as well, but people just got to understand that. It's so wonderful. You can convert as little as you want. Typically you want to do chunks of, I say, $100,000 at a time. But you can convert 100,000 chunk. You can convert a $500,000 chunk. You don't have to do the full amount. You do what's both meaningful and comfortable for you.
Yep. Yep. And then another thing I wanted to bring up, which you brought to my attention, Peter, is that typically insurance carriers will not do convertible term policies on juveniles. However, there is at least one fraternal carrier that does have competitive whole life policies where you can take out convertible term policies on your children.
Yes.
As you can imagine, purchasing life insurance on a child is pretty inexpensive, and you're really helping your child out because you're protecting their insurability, right? And you're locking in the best rating, right? While they're still young and it's still very inexpensive. And now, no matter what happens to their health, they have the ability to convert it to permanent life insurance, right?
Yeah, and I just wrote one the other day. Actually, a grandparent wrote the policy for a newborn. So check this out. It was a boy just born recently. $250,000 of convertible term. It's a 60-year term. You heard me. A 60-year term. It will be convertible for all 60 years. How much do you think that premium was, just roughly? Just guess.
I'm not going to venture a guess.
$25 a month. Let me say that again. $25 a month. And it came with guaranteed purchase options up to $50,000 so they could actually add additional coverage later on. But $250,000 of convertible term locked in for 60 years. Every single child in this country, at the very least, in my opinion, should have that policy.
Yeah, yeah. How much do you love your children? Well, that's evidenced by how much life insurance you have on them, right? Now, granted, typically, whole life is obviously a lot more expensive. So typically, for the parents, you have to take first of all, you have to take out coverage on yourself first,
Right.
and then you will be limited on how much you can take out on your children based on how much you can take out on yourself. So you're typically not able to take out a massive amount on your children. But in my opinion, you should do what you can to protect their insurability. And especially if we're talking about converting to whole life while that child is still young. Remember, the most important element in whole life is the passage of time. What does a whole life policy look like if it's been in force for 70 years? It looks amazing. I mean,
Oh
that
my.
is a phenomenal, phenomenal policy. Like that is incredible, you know?
Even base whole life will look good, right? I have
Yeah.
my son has $300,000 whole life policies, and they're just base. I didn't really do an IBC case or anything like that. And he's got my goal is that I want him to have at least we want to lock in at least $1 million of coverage for him, and it's really not that it's not that difficult to do, and it's my money. I have access to it if I need it, right? At least the whole life part. I
Yeah,
don't.
Peter. So let's do what our opponents do, which is engage in projection and always trying to find the worst, most evil motive for what you're doing, right? Peter, so what you're saying is you want to profit from your son's death, right? You evil, evil father, how dare you? You want to answer that ridiculous objection that we sometimes get?
Yeah, no, and it's a good one. It does come up quite often. No, I don't want to profit off of. I could not imagine. I truly believe the most horrible thing to ever happen, and I only have, one son. It would be. I don't know what I would do if I lost my son. But anyways, no, it's about ensuring their insurability. It's so later on, if he's diagnosed with anything or whatever, we've locked in his insurability forever. Um, Another thing is, as you like to talk about all the time, whole life is like a fine wine, right? Well, guess what? We got to get the thing in. We got to get these whole life policies in force. Even if you take out a base whole life, that it's going to take a while for it to get going. I want to lock in those rates. These rates, these are like term-like rates, but it's whole life. Like you said, let it soak for 70 years. Holy cow. Like
Yep.
like I said, but I'm still going to have access to it. Now, does that mean I want to profit off my son's death? No. But if I need that cash later on, this is why we call it cash value life insurance. If he decides to go to a school and I want to help him out a little bit, which I'm not a big fan of, but if I want to help him out, I have access to it, right? But I'm not ever going to transfer that ownership over to him prematurely. It's my money. That's what I believe in. That's why I tell my clients too. When I die, he'll become the owner of the policy, right? Unless I decide to make a contingent owner. But it's my money. I paid for it. So guess what? I'm going to hold on to that money until the day I die.
And now you have options, right? You have all kinds
Right.
of options. So when you convert the term, you can keep it yourself because you're still you all you're doing is going to benefit your children ultimately. So the fact that you're still the owner doesn't mean you can't use the cash value for the benefit of your
Right.
children, obviously. And then when you pass, you're giving him not just a death benefit, because the policies on you will pay out a death benefit. The policies on your son will not pay out a death benefit until he dies. So what you're doing is you're passing ownership of the policy to him. So now you're giving him not just a lump sum pile of money, but a cash flowing asset that hopefully you'll, before he receives it, you'll teach him how to use it, what to do with it, right? So he'll know how to manage it when he gets it, and he'll understand how valuable that is. A policy that when he gets it has been seasoned for, I don't know, 40 years or whatever, right? That'll be extremely valuable, extremely
Yeah.
valuable.
And it's a non-correlated asset class, right? I mean, what if the government changes the rules on cash value life insurance 30, 40, 50 years down the road? The one whole life policy with one of our fraternal insurance companies that he has, it comes with critical, chronic, and terminal illness benefits. So he's got all the living benefits locked in. So yeah,
Yep. Yep. So again, protect your insurability and the insurability of everyone you care about, yourself, your spouse, your children, with convertible term policies up to the limit of what the insurance company will give you. It's term, so it's fairly affordable. And if you can afford homeowners insurance and car insurance, you can afford convertible term life insurance. It's just a matter of getting your priorities in order. So convertible term first, and then if you're ready, it might be day two, right? We can convert. So the last few cases I had that were whole life policies, they were all term conversions. We took out the term first, and then we converted it pretty quickly because we kind of knew what we wanted to do. But now they're fully insured between the remaining convertible term and the whole life policy, and they've got their spot reserved in line for future conversions, future policies.
yeah. And I know this is a little bit off topic, but I do want to mention it. I I get like I get frazzled when I see people take out these small rinky dink policies for their children and grandchildren. This is where I'm sorry, but what is $10,000 or $25,000 going to buy 40, 50, 60 years in the future, right? This is where we're talking about writing large quarter million, $1 million juvenile policies. Using these term policies, buying some whole life as well. That's really going to make a significant difference. I just wanted to mention that. I'm not picking on anybody that just took out a $10,000 policy or something, but to any insurance agents or financial advisors out there, I just want to say be bold. Okay. Really go a little bit further. Talk about the amazing benefits that this has and get them the right amount of coverage now. Ensure their insurability. Don't do this small stuff. It drives me crazy.
Yeah, I agree with you. I don't see the point in that. It's like if your $500,000 house burns down and you have a $10,000 homeowners insurance policy. Here's $10,000. Well, that's great. What about the 490,000 plus all my
Right.
personal items, everything else? Well, here's $10,000. Yeah, that's not that's a joke. That's a joke. And I know, Peter, you have unfortunately inherited some policies like that with very small death benefit amounts and had to do the heartbreaking job of handing a dramatically insignificant, insultingly low death benefit to a widow. That I'm sure was not fun.
No, I mean, I was literally, I'm there holding her hand. I'll never forget that one. I mean, I've done it a couple times, but the one I'm thinking of that I've publicly talked about, I'm at her kitchen table, and she's crying and she's saying, "Why did he do this to me? Why did he do this to me?" And I think I delivered, I had to look back, I think it was like $1,500. Like, because he died at 81 instead of 80. And he actually had a group term policy with Sprint back in the day. And he died at 81 instead of 80. If he would have died at 80, she would have got a bunch more money, right? I
Still
mean,
not enough though. Those employer policies are typically
no,
not a lot.
no, but she didn't have hardly anything. This policy that I delivered a claim check for, he only took that out because he was trying to get the fraternal insurance company that he was a member of, he was trying to get them to win a trophy. And then what's really sad about that is that the agent sells just a participation policy in a way, right?
Yeah.
Later on, I'm actually cleaning out some of those old trophies and we're literally throwing them out. And that's when it really hit me. I'm like, wow, he took out that policy to get that trophy, and now I'm throwing that trophy out. That
I don't see the point in being anything less than fully insured. I don't see the point, right? If if you have a $500,000 loss and you're insured, do you want the insurance company to cover like half of that, a third of that, 100,000? No, you want them to cover the full amount. Duh. It's the same thing with whole life. So the insurance company, the actuaries of the life insurance company, they are the experts at determining your human life value. They're going to underestimate it, of course, because they don't want anyone to profit from someone's death. All they're doing is replacing someone's lost income, not adding anything. So you need to be fully insured. Your spouse needs to be fully insured, and your children need to be fully insured with a convertible term with a company that has a competitive whole life product. I really don't see the point in doing. I mean, something's better than nothing, of course. I'll always say that. Something is better than nothing. But we're talking about convertible term policies here. So typically, affordability is not really an issue, right? We're not talking about paying tens of thousands of dollars a year into a whole life policy where then we need to make sure it's commensurate with your means, right? So,
yeah, I mean,
if you say you can't afford convertible term and you own a house, I would tell you you need to sell your house and start renting so you can afford convertible term. You need to get your priorities in order. Your life is more important than your house or your car, right?
right. I mean, absolutely. You gotta, and I like when I'm running a quote, I like to use, I have a site I use to actually look at the cheapest term. And I just go down and like, they're no good, they're no good, they're no good, they're no good. Okay, there's one of our companies because, they all have good convertibility privileges and they have a good product. Like you said, even if you have a good convertibility a feature, but you got a junk product to convert it to, what's the point, right?
Right, right. The conversion privilege isn't worth much. And again, we're talking about the difference between with these good carriers, the difference between non-convertible terms, which some of them don't even offer. And I agree with that. Like, what? Why? I don't see the point. I don't see the point in taking out a non-convertible term policy. But if they offer both, which some of them do, typically the convertible term policy is it's like $20 more or something. It's not that much more expensive. So why wouldn't you take that, right?
Right. And then throw in some companies will offer living benefits. And then, by the way, be careful about that too, because sometimes agents oversell the living benefits. So there's a difference. There's two different types of the way they calculate living benefits. I'm a big fan of living benefits, but I just want to be clear that there's some lawsuits going on right now, for example, because one term insurance company that I absolutely hate, and Logan does too, I know. We're not going to talk about them. They, yeah, let's just say it was actually the one case is an agent wrote a policy on his own wife, and he thought that she ended up having to exercise the living benefits. And now it's in court right now because he thought he was going to get a lot more. And he was an agent that literally sold the product. So we got to be, like I said, you got to depend on agents that really know these products in and out. You really do, because you could get a rude awakening.
Yep. Yep. Things are not always what they seem in terms of just the numbers. There's two things I wanted to say to that. The first is term with living benefits is great. I'm not aware of a single term policy that has living benefits and a conversion privilege that's worth anything. So I'm not aware of a single term policy. Now, hopefully this will change. Right now, the companies I'm aware of that have a conversion privilege that's worth it, meaning you can convert it to a good whole life policy, none of them have term with living benefits. So term with living benefits can be valuable, but you're sacrificing something because now you have a conversion privilege to a product that's not very good. It still could be worth it. Again, depends on what your priorities are. Um, and it was interesting. You say it's in the courts. It's kind of interesting. And this is a whole nother rabbit hole we can get into. It's interesting how when people put their money into Wall Street vehicles and they lose everything, it's the customer's fault. It's like, hey, you knew the risks, right? You lost everything. We don't care. It's your fault. Like you knew the risks, right? They don't care, right? But then when all of a sudden when it's in insurance, all of a sudden it's the agent's fault, right? All of a sudden the
Right.
company needs to be sued and everything because we all know customers are too stupid to make their own decisions. They're little babies who can't possibly, be held accountable for anything. It's that agent, it's his fault, right?
Yeah.
So I'm not a fan of Wall Street vehicles, but I will defend him in that I think they do have the right attitude that look, you, Mr. Customer, have to be responsible for your own decisions. You can have other people advise you, you can delegate, have other people do the work for you, but at the end of the day, maybe your financial advisor did something wrong and he should be held accountable for that. But you can't abdicate your decision-making responsibility to somebody else, right?
Right. I mean, let's face it. There's no moral hazard anymore in this country. The
Well,
government.
so Peter, you're saying that wrong. There is moral hazard. You're saying it backwards. Moral hazard means I know I'm going to get bailed out. That creates moral hazard. So the Federal Reserve and the powers that be have created moral hazard such that the big boys know that they can make all these risky bets. And if it pans out, they make a ton of money. But if it doesn't, then they
Right.
get bailed out at taxpayer expense. So why would they do any sort of prudent risk mitigation strategy?
Right. I mean, just look with.
Whereas the insurance companies, thankfully, don't get bailed out, right?
Right. No. And I mean, this lawsuit I'm talking about right now, this is with one of the most popular term products out there, but it's not as good. I mean, it's better. I'm glad people are buying it. I mean, some coverage is better than nothing,
Of course. Yep.
but this is like this case in particular, I was stunned at how little they were paid out on the living benefits. I think she ended up having cancer. And then, by the way, because there was a discounted death benefit method, the face amount went from like $1 million down to like less than $500,000 or something. So I'm not going to go the whole way in that rabbit hole. Just understand you're going to get a very small payout on the living benefit side, and then they're going to take away a whole bunch of your death benefit. And now you're probably not even insurable if you're needing that living benefit to begin with, right?
Yeah, it's a huge rabbit hole, Peter. We could talk all day about numbers, right? You have to understand the assumptions behind those numbers because everybody knows if they can present better looking numbers, you're more likely to buy from them. So they can find all ways to do it, right? Where you think, oh, I have $1 million of living benefits. Well, not really. You have $1 million death benefit with a living benefits rider that is going to be converted or that's going to be used, like you said, via the discounted cash flow method. And I have a case right now where we're going for a much better long-term care policy because what they have is exactly what you're describing. It's a term policy with living benefits. And once the client actually dug into it a bit, he's like, wait a minute, you're telling me I'll get like $300 a month? Like that's my benefit check?
Yeah.
And it's like, well, in some circumstances, yes, it would be that low, right? In almost no circumstances are you going to get $1 million worth of living benefits, right?
Right. Yeah. And by the way, I have that article saved somewhere, so maybe in the future, if we want to, that might be a good topic we can chat about. Just talk about that case in particular because I thought it was kind of interesting that it was actually an agent and to have it happen to his own spouse.
Yeah.
You know.
Yeah, it just proves true your mentor's point, what he said, and I doubt it's original with him. Never assume anyone knows anything about life insurance or annuities, including life insurance agents, financial advisors, right? Never assume anything.
Right. Absolutely. We can't anymore. Don't
It's
believe.
by the way, this is the same thing in every industry. I did consulting, like it's it's not as uncommon as you might think to meet a C-level executive at a major Fortune 500 company who does not understand some basic project management principles or some basic financial principles. It's not as uncommon as you might think, right?
Right. I mean, you don't know how they got there, right? You don't know. They might just have had connections. You never know. Or sometimes you actually believe, you know, what the company actually tells you. And then they might not be misleading you, but maybe it didn't go down, you know, like I said,
Yep.
this whole
Yeah.
discount, the
I don't
whole,
think they're intentionally misleading you, but there's some fine print, right?
right. And let's face it, the marketing side of the company might make it sound amazing,
Mhm.
So then you're like, oh my gosh, this is the best thing since sliced bread. Until a claim actually um and happens. And that's really when the where everything gets interesting. You really learn the good insurance companies when you go through a claim. That's when the agent and the advisor, that's why I'm so picky with the companies I use, because I've delivered so many claims, and that experience has to be amazing. If you have a bad claims experience, that could totally ruin your reputation as the agent, especially if you were the one that wrote the policy. Now, if you didn't write the policy and you're just coming in to assist, that's a little bit different. But I want to be there from we're going to be there. We're going to write these policies. We're going to be there to handle these claims. That's what makes us professionals and special.
Yeah, there's a whole lot more we could talk about there, but yeah, so this was about convertible term. We can talk more about this in the future, but the message is secure your insurability, your full insurability with convertible term policies with a company that has a competitive whole life product and do it yesterday.
Yes.
Okay, thanks for your time, Peter. Greatly appreciate it.
All right, Logan. Thank you. God bless. Godspeed.